I ask you please save your questions to the end, and I'll be happy to answer any questions that you have. The topic I'm going to be talking about today is our current financial crisis and what led us up to it. I'm not going to be talking about the politics or anything that involves that. It's just about the pieces that made this happen. On September 18th, 2008, there was an emergency meeting called by Henry Paulson, the Secretary of Treasury, and Ben Bernanke, the chairman of the Federal Reserve. Called that in the Capitol, and there was top leaders from both the Republican and Democrats there, both House and Senate. At this meeting, Chris Dodd was also there, and he said, quoting from PBS's Frontline, "Sitting in that room with Hank Paulson saying to us in very measured tones, with no hyperbole, no excessive adjectives, unless you act, the financial system in this country and the world will melt down in a matter of days." There's multiple pieces that made this problem, and I'm going to be talking real briefly about those. One is subprime lending, deregulation, over-leveraging of banks, and the shadow banking system. I investigated these reasons for the same reasons that everybody else, it's in the news, it's current events. I love current topics, so I investigated this. I used sources from TV shows, magazines, newspapers, and even press releases. First thing I'll talk about is the subprime mortgage, or subprime mortgages. Subprime mortgages are mortgages that wouldn't meet normal underwriting criteria. These are mortgages to people who have poor credit history, bankruptcy, or just limited credit history. Starting back in President Clinton, he pushed Fannie and Freddie Mae to start giving more and more of these subprime mortgages, and other lenders followed suit. Even back then, there were warnings. The Financial Times, on March 30th of 1999, said, in moving tentatively into this area of lending, Freddie Mae is taking significantly more risk, which may not pose difficulty during flush times, but the government-subsidized corporation may run into trouble during a downtime, prompting a government rescue similar to that of the savings and loan crisis of the 1990s. Now, of course, we call subprime mortgages toxic assets. They've been bundled, repackaged, resold, and leveraged by banks. Another problem that causes this current financial crisis is deregulation. During the 80s and 90s, deregulation was eased. The Washington Post wrote about this, that the result was a period of unrestrained growth at companies. They had pioneered the businesses of selling bundled mortgages to investors, and as demand soared, sordid profits. The Financial Services Modification Act of '99 was another piece of this deregulation, which also repealed complex and opaque financial instruments. Economist Robert Eklund on his website wrote that in a perfect world, rolling back these deregulations made sense, but in the current climate, it amounted to corporate welfare for financial institutions and a moral hazard to the taxpayers. The final piece of this puzzle was over-leveraging. No, I'm sorry. The next piece of this puzzle was over-leveraging. Over-leveraging is if I buy a house for $100,000 as an investment property and it increased in value $10,000 a year, I came up with $100,000. I leveraged nothing. I just increased my value by $10,000 a year. But most people don't have $100,000 in their bank. So they come up with a mortgage. Let's say I put 10% down, pretty standard mortgage, $10,000 on that $100,000 house. 6% interest is $5,400 a year that I'm paying interest on that, but I'm increasing in value by $10,000 a year. Therefore, I'm actually increasing my asset, or the money that I put in there, by 65% every year. That's my rate of return, and I leveraged myself 10 to 1, $10 for every one for that mortgage. The extreme example of that would be if I did that 100 to 1, only $1,000 down on a $100,000 house. That's not really what happened, but that is pretty much what happened. People didn't have enough, and this is what subprime mortgages were really all about. Banks did the same thing. They bundled these into huge packages and then leveraged them against other banks. That works great in great financial times, but the problem is that when the economy goes down, so does your value of your properties, and as your property value goes down, you're decreased by say 30% of your home value. If you're decreased by 30% of your home value, now your property is only worth $70,000. I only put $1,000 down on it. Now I'm $29,000 in the hole. The bank can call me on that, saying that you don't have enough collateral on your mortgage. We need that $29,000. That forces me into a position where either I got to come up with that money, which I probably don't have, or I'm going to have to refinance the house, which not too many banks are actually going to give you that refinancing. So you end up in foreclosure. And that's what's happening in the subprime mortgage crisis right now. Now the final piece of the puzzle is the shadow banking system. Shadow banks are investment banks, hedge funds, and other financial institutions that are non-banks. They're practically untouched by regulation. They deal with things called credit derivatives and collaborative debt obligations, or CDOs. These are basically high-risk leverage lending that is so complex, there's very few people even in Wall Street that understand how they work and what they do. Some of these packages that they put together were considered AAA, the safest bets you can make. Now they're called toxic assets. In conclusion, the things that led us up to this are subprime lending to people who shouldn't have gotten mortgages by banks that pushed mortgages on them, deregulation, over-leveraging of banks, and our shadow banking system. Continued debate, outrage, and policy questions, including politics, will go on for probably years over all this. But I hope they have a little bit better understanding of the pieces that got us there, and we can make better decisions about how to move from here. Thank you very much, and if you have any questions. Thank you. It was kind of a tough subject to talk about. I had a real tough time finding a subject, so I just worried it was probably not the most interesting one in the whole world, but
That's fine.
thank you very much. Anybody have any questions at all about it? I did a lot of research.
Madoff wants to get out of jail.
You really understand.
Well,
I say, young man, Madoff wants to get out of jail. He wants to spend, until he gets sentenced, he wants to spend it in his penthouse.
if I was him, so would I. I don't think that's going to happen. I think he's going to be in jail, probably a 30-year sentence, and
Not only that,
that's it
his
for him.
accountant said it that way too.
Yeah, they got his account.
Yeah.
I think what he's doing right now is protecting his family. You know, he's trying to save as much money as he can for them by taking on the rap and not letting any of them. And everybody knows that the whole family is in on it.
Not only got a yacht, but he's also got a boat, right?
Yeah, he's a yacht, boat, God knows how many houses, and, yeah. I think they said he's worth like, I don't know, $800 million or something like that, just his worth, so.
Yeah,
Pretty
all
scary
in offshore accounts.
Yeah, all untouchable offshore, yeah, exactly, exactly. Any other questions? No? Great.
Yeah, how do we weather all of this?
You know, nobody knows. The problem is, look, AIG is the big problem, and of course that's all in the news right now. It's in the news about the bonuses, but that's not the real problem. That's outrageous. But the real problem is that these credit derivatives that they dealt with, these are the bundled subprime mortgages that are just toxic, that people are, you know, foreclosing on like crazy. They were the biggest dealer in that. Some people estimate that they have as much as $1.6 trillion still left in these garbage derivatives that they were dealing with. So nobody knows really how deep the rabbit hole goes. And, you know, that's the scary part about this. Is,
I hope no
you
one
know.
here has their money in AIG.
You know, the funny thing is AIG, it has so many good parts about AIG when you look at it. They're the largest seller of life insurance, like 97 million policies of life insurance, and that's a money-making venture. You know, insurance to all kinds of things, to companies and businesses and legitimate things that are great, and then this one little section of them, just unbelievable. Unbelievable. It's an outrage. I think every American has a right to be PO'd. So. Thank you.
Thank
you.
Very much. Thank you. I have to do one more, so if you guys are interested, maybe I'll come back and do the